Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It will be the first and the last stock pick of the day for this week. I am back from vacation. Welcome to everyone. Good to see you all again. We are going to take a look at HPQ, HP Hewlett Packard, ticker HPQ, out of the information technology sector. Really nice to be back and to see everyone. Well, for you to see me anyway. I can't see you, obviously. But back here at home, we had a great vacation. I will share some pictures here on this weekend as we go through them. Some of the sites that we saw while we were down there. Very nice to get out and away for a while with the kids. But we're back at it today, so let's jump right into the video. And if you want to know more about this company, it is a Warren Buffett approved. It is in his portfolio. I think he picked it up last year or maybe the tail end of 2021. I know he picked up some in 2022 there. And if you want to know more about them, check them out at their homepage, www.hp.com. That is their homepage where I pulled this information from. And you're probably well aware who they are. I know almost every company that I have worked for, whenever they give me a laptop, it is a HP laptop. So you may have one of their laptops, you may have one of their printers, and that's the type of company that they are, right? They inked and toner cartridges, a lot to do with printing, shops and PCs, laptops, desktops, gaming, business laptops, business desktops, right? Ink and toner cartridges, printers, instant ink, laser printers, so all types of different printers. I know they've gotten into 3D printing as well. So that is one I think that's more based on what's coming down the line for the future. Mice and keyboards, headsets and speakers. So they do the accessories for computers as well. So that is software bundles, software packages, care packages, services, webcams and microphones. I mean, they pretty much do everything in the computer space or gaming space and printer space. That is what their bread and butter is. Now, they weren't down a lot, but the reason we are taking a look at them today, they were down 0.41%. Talking about HPQ here, HP Inc. is the name, HPQ is the ticker, out of the information technology sector. Closed out the day at $29.29. 52-week range as low as $24.08, as high as $41.47. So they are still closer to that 52-week low, although they have started to creep up a bit over the last 6 months. Average volume 6.3 million. Today was 2.65. Real kind of volatile day. Started out low, recovered a bit, and then ended the day lower than when they started. Right, market cap of 28.86 billion, a beta of 1.03. So they are more volatile than the overall market. Really right in line with the market, but just a little over the volatility over the average market. You can see that volatility here throughout the day. Very nice PE ratio, down low. Below the teens, 11.49. Like them to be down a little bit more. Earnings per share, but that's not bad. In this market, that's actually pretty good. I think it's still around 20 is the average of the overall market. Earnings per share, EPS, is sitting at $2.55. Next earnings date will be May 29th through the June 2nd, sometime in there. Forward dividend is $1.05. They are a quarterly payer, so divide by 4, but we'll see that here in a minute, what they pay out per share per quarter. Nice dividend yield at 3.51. Obviously, if you could get them closer to this 24.08, that would be a higher dividend yield. Ex-dividend date, March 7th. So I believe they just paid out a dividend, actually. I believe I just saw that in my portfolio this week. I am long HPQ, right? This is one that you'll see here in a moment. I do have an option on. Currently, I believe it's going to be called away. Actually, I don't believe it's going to be called away. It will be called away. I need to do a video on options. I am doing more in the option space. So this one, since they will be called away, I will be doing some puts on this one to buy it again, because I do want to hold this long term at a lower cost basis than what I have now. 1 year target estimate. They do not show a 1 year target estimate here, which is a little odd, but they just might not have anyone who's taking a look at this and wants to throw their hat in the ring. All right. So some other things I like to look at, and this is all brought to you by Yahoo Finance. I am not affiliated, just one of the sites that I like to look at. The others on this page where I like to go in and look at, if you get onto Yahoo Finance, you can click on each one of these tabs at the above, like statistics and financials. That's where I do a lot of my research. I mean, if you go into statistics, go down the page a little bit. One of the things I like to look at is dividend yield theory. Basically, what you can look at is its 5-year average right here is 2.99. And if the current dividend yield, 3.51, they'll call it the forward dividend yield, that's forward looking, is higher than the 5-year average, then it speaks to some potential undervaluation, right? So it's 5-year average is 2.99, its current is 3.51, it's potentially undervalued. If this number here the current or forward dividend yield was lower, then it would be potentially overvalued, right? That's how dividend yield theory works. So that's a quick gauge to see if you want to do any more research on this company. But obviously, you want to do more than just look at the dividend yield theory. You want to go and look at their free cash flow. That's another item that I look at. The dividends are paid out of free cash flow, so you want growing free cash flow over time. You can see here that goes back to 2019. Again, click on this. You'll click on another button that says free cash flow. You can find this at the bottom. And 3.983 billion here in 2019. Growth from 2019 to 2020, 3.7. Growth into 2021, 5.8. And then a big drop, which was expected. There was a lot of people who went out and a lot of companies who went out and bought PCs, desktops, and laptops for their employees during the CV-19 issue we had, and people were going home, working from home, so they needed those computers. So a big jump in sales here. So this was kind of expected, and it kind of is in line, even though it's a little bit lower from 2019 to where it currently is from 2022. And it looks like it might be even a little lower this year. So this one is one maybe to potentially watch, and you'll see that here in a minute that their earnings is down as well. So that is the reason for that decrease. A big jump in 2021 because of CV-19, and that showed up in 2019, right? People who bought computers within the last couple of years obviously aren't in the market for a new one. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. And this one, I'm not affiliated with them either, but they have 25 stock analysts that have taken a look at this. They call it a consensus hold. So if you own it, don't buy any more, wait for it to go down. But it is trending back towards that sell, right? If you got onto this website, you'd be able to click on each one of these bars on this little range here, and it'd tell you how many people are a hold, how many people are a buy, how many would be a strong buy, how many would be a sell, and how many people would be a strong sell. So out of these 25, they are leaning towards sell, but overall it's a hold. Right, and it may be because they have a low estimate of $24.24, which would be a 17.24% decrease in the stock price. Average estimate of $30.03, which would be a 2.53% increase in the stock price. And this is a high here of $38.85, which is pretty close to what we saw as far as their 52-week high of $41. So they're thinking it could get back up to that 52-week high here, close to that $40 range, which would be a 32.64% increase. And if you bought them now, you'd be able to collect that 3.5% dividend increase. Obviously, if you bought them down here, that would be much higher. And the reason I wanted to do options on this one, I think we're probably closer to the average currently. So I put some options right around $29 here. We'll see that here in a minute. Now, this is another one you can get in, look at the statistics. They have a lot of information in there. You want to look at are they paying down debt? Or they have a lot of debt? Again, free cash flow in there. Return on invested capital is one that I like to look at. So go into statistics, and I've got it over here. Return on equity, I usually look for a positive 10, but as we saw, there was a big jump up in 2021 in sales and a big dip down in 2022. So this return on invested equity is expected, right? But the ROIC is very high, 37 return on invested capital, 37.8%. Very nice to see. That's what I'm really looking for. Anything over 10%, I really like. And sometimes a little lower. It really depends on the company, right? A lot of companies that sell goods like a Kroger's or a Walmart or something like that will have lower return on invested capital because of the nature of their business. So compare them to their competitors in the industry as well. Don't just let them stand on their own. Maybe compare them to companies that are similar to see what their return on invested capital and their ROE is, as well as the rest of the statistics that are out there. And the other one we like to look at is dividends. So let's jump over and look at that. So as you can see, we want growing dividends over time. We all want a little bit of a bump in pay. So you can see I went back to 2021. It was 19 cents and some fractions of a penny back there. And then 2021, or in September of 2021, it was 19 cents. In December, it jumped up to 25. Rolled out most of 2021 and 2022 at 25 cents. Then in December, again, it jumped up to 26 and some fractions of a penny. So it is growing. Dividend growth is at 15.48%. Very nice to see. Double-digit dividend growth. Very low payout ratio, 39.4%. So we want a low payout ratio. I like anything 75% or below for a payout ratio, and that is means that they can basically continue to pay down debt. They have a lot of room to increase their dividend over time. They're not in any potential for cuts, or at least you hope they're not in potential for cuts here. So that's what you're looking at. They are a quarterly payer, and like I said, 26 cents and some change fractions of a penny there per share per quarter. Now, as you can see here, this looks a little wonky because it doesn't show how many shares I have. So I clipped out what I usually show in my portfolio updates. I do have 151.755 shares. I believe it's actually a little bit more because it just paid out the dividends, but I haven't added that to this. But because this is in the money, you see that one is red. I'm going to sell 100 shares out of this, so it will be 51 and maybe a little over 51, 52, whatever the payout was. I'll add those in, but then I'll do what they call the wheel, and I need to do a video on what that is, the wheel options and all that. But this is an option play that I had on there. I had it at 29 cents. So the option is going to pay out at 29 cents, even though this was at 29.28. I will not get that extra 28 cents. It will just be 29 cents and pay me out for those 100 shares. But because of the option that I ordered, the option premium I already received, I actually made out a little better than what it paid out today. So I am up 8%, right around 8% on this position when it pays out, right? So I have $4,451.91 into the position. Obviously, when I sell those shares, it'll drop that down, but that's all right. I'm going to take that cash and do a put option and continue that until I can buy this below my cost basis. And my cost basis was $27.49. So I'm going to look for something slightly below that cost basis to set a put option and continue to play options on this particular stock because I want to own it long term and do the options on it as well. Well, that is HPQ. Let me know what you think in the comment section down below. Again, first one back. Hopefully you all had a great time while I was gone and didn't miss me too much. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. We did just go over 500 subscribers. Really appreciate everyone out there. So help me get to 1,000. You can actually monetize the channel once you get to 1,000. And the way to help me do that is drop a comment down below, subscribe, hit that notification bell, share with anyone you think might find value in the content. Anyone who is a dividend growth investor out there, go ahead and share this content with them so that we can get the word out and we can all grow together on our way to financial freedom. I do personally read and respond to the comments on the day that I post a video. So if you comment today, I'll drop a response down below. For those of you who are dropping comments on older videos, apologize. I can't get to all of them. I do have a job. I do have kids. My wife likes to spend some time with me, at least most days. She especially likes it whenever I take her on vacation. So she's still lovey-dovey, at least for the next couple of weeks. And then we kind of grind on each other a little bit because we both work. We're both working professionals. And with kids, sometimes we don't get to spend as much time as we do. So for those of you who do not take advantage and go on vacation, I highly recommend you taking some time away from work with your significant other or by yourself with some friends. If you have kids, make sure you get them out as well. It really does make a world of difference. It's always hard to come back to work and you realize what life could be like if you were able to live financially free and do the things that you really wanted to. And that is really what dividend growth investing is about, that financial freedom in the future that we're all looking forward to, where we can use the dividends from our portfolio to live the life that we really want to do and do all the things that we want to do out there. Well, I'm rambling a little bit now. I'm just excited to be back. So really appreciate everyone out there. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and temporary purposes. Investing involves risk against money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Hey, happy Easter, all of you out there. I will have a portfolio update on Easter, so tune back in for that one, and we'll see you then.